we're going to go over to ord-oracle.com. Now, every Tuesday and Thursday, we are joined by Tim Ord. He is the author of the Ord Oracle, this fantastic newsletter. I really recommend checking this out. You can go to his website, ord-oracle.com, check out the newsletter, check out the book. Additionally, go over to the services tab at TFNN. He has 2 fantastic webinars for your viewing. That is the secret science of market tops. That's how to, of course, identify market tops. And then 6 secret ratios every trader should know. Really recommend it if you enjoy him coming on Tuesday and Thursday. But before you do that, make sure you get some bonuses with the Tiger Dollar Holiday Double Bonus Sale. You're going to get some fantastic savings that way. Tim Ord, how are you doing?
Good. How you doing?
Doing okay. So a little bit of shake up on the Fed decision, gold doing its thing. What are we looking at today, Tim?
Actually, let's look at chart 1.
Perfect.
So this is kind of the where the rubber meets the road, and it's something that needs to be lined up. And if it doesn't, that'll tell you what 2025 will look like. But anyhow, the bottom, this is the Zweig breast thrust indicator, ZBT for short. And the bottom window is this indicator is NYSE advancing issues over NYSE total issues. You take a 10-day average of that. The trigger is you need a reading below 20, or not below 40. Mm-hmm. We're at, as of yesterday's close, we're 0.35. So that starts it. And within 10 days, you need a reading of 0.6. And so it starts when that indicator turns up. So I don't know if it's going to turn up today or tomorrow or the next day or whatever. But it doesn't necessarily start today from today. It actually could be tomorrow or it could be Monday. Don't know. But anyhow, we're in the region where it starts. So now if it fails not to get to 0.6, that's a bearish sign, because this indicator only gets triggered in bull markets. So if it does get triggered on this next rally and we don't see 0.6 within 10 days, in other words, that's 2 weeks away, then most likely 2025 will not be a raging bull market like the last couple of years. So we'll have to wait and see. But this indicator, I'll be watching real carefully. And let's flip to chart 2 real quick.
Yep.
So this chart so far, it needs to be triggered. You need to see the reading around 2 weeks out to get 0.6. If we do, chances are 2025 will be a bullish year. So that's so we're kind of looking far out here. So let's flip to chart 2.
Yep.
And this is all about panic. And panic only forms at bottoms. You don't get panic, you don't have a bottom. Yesterday's trend closed at 103. We had 117 uptick readings. Neither one of those indicators are panic levels. And now, if you notice, this chart goes back to, looks like about mid-2023. So it goes back almost a year and a half. And the tan area on the chart shows the times when the 10-day trend got above 1.2 or higher. And that's usually what happens at bottoms. So over the last, September, the last time we got a reading near 1.2 was back in September. And even though the market kept going up and we had some kind of minor bottoms along the way, the 10-day trend never got there. Yesterday's 10-day trend closed at 0.98. And that's with almost a 3% decline in the market. So this is all actually kind of a bearish here. Normally, when you get a pullback, you want to see that trend go up. If you do, chances are it's a pullback in an uptrend. If you go pullback and you don't see panic, then that decline or that pullback will continue until you do get panic. So even though we may see a minor bounce short term or some sort of a bounce short term, it's not the final low.
I see.
It won't be a final low until the 10-day trend gets up around 1.2.
Okay, I see.
So that's another kind of a bearish sign. So, and also this quarter is supposed to be the strongest quarter of the year. And that's, we're actually down for December right now. So we don't have a strong quarter. And also, yesterday was down almost 3%. Normally, when the market declines 2% or more, usually it does it in clusters. So you'll never, it's not a nominee, but you'll never see a 2% decline, and at some point you'll see another within close proximity of that 2% decline. So in my opinion, we're going to see another 2% or better decline in the coming days, where it probably won't happen this week, maybe not next week, but maybe first part of the year.
I see.
So all that doesn't bode well for the ZBT. And the next decline, because I think there's another one coming, there's high probability another one coming. If it does, we get the trend up to 1.2, then we'll start looking bullish again. But there's no reason, in my opinion, to buy yesterday's decline. Not yet. We did close outside. Actually, I think I got that chart. Flip to chart 4.
Okay. I have it up right now.
This is kind of some a bullish sign short term, but if you look at the volume chart, which is the second window up from the bottom, you'll see a spike in volume. Normally when volume spikes at least 30% compared to the previous day, yesterday's volume spiked near 100%. That's an exhaustion move to the downside. And we also noticed we did close below the lower Bollinger Band on the daily time frames, and I pointed out previous times when that has happened. So there's a bounce here. How high the bounce, I don't know. I'm not playing it because I don't see enough panic in the market to really suggest this will be a lasting bounce. But on a short-term basis, you may consolidate up a little bit. But I'm more inclined to wait for the bounce and possibly even go short. That's a possibility. I don't see any reason to short right here because there's some signs. But last week or Tuesday, I was actually all bullish because we had trend readings up there in that vicinity between 600 and 605, and that support should have held right around the 600 area, and we blew right through it. So that's when these type of bullish signals fail, then you got the bigger forces going on. So I'm actually kind of leaning bearish here. So am I short yet? Not yet. But I'll see how the bounce goes, and maybe I'll get short. I don't know. But things are not actually looking ideal here for the market.
Sure.
We can look at chart 3 here real quick.
Absolutely. Let me get it up.
This is another chart that it's not quite as good as ZBT because it takes in the 10-day average, and but this one is a 3-day average, a little bit shorter term. We did get below point, and we're actually at 0.47 yesterday. We need to get below 0.7. We did that. Again, we're down 0.473, so we're way down. And so now 10 days later, we need to see a rally up to around 3, and that would be a sign of strength off of a bottom. And that'd be a trigger that would be bullish too, but I don't think we're going to get anything like that over the next couple, 3 weeks. So
Tim,
things are not looking good.
No, I kind of share those sentiments a little bit as well. Tim, please stay right there. Folks, we'll be right back with Tim Ord right after this break. Welcome back, everyone. This is Jacob Shoup. You watch the Tom O'Brien Show. I'm joined right now by Tim Ord of the Ord Oracle. Again, I really want to recommend you go to check out his website, ord-oracle.com. There you can check out his newsletter, his book. You can contact him. Additionally, on TFNN, we have 2 of his webinars, Secret Signs of Market Tops and the 6 Secret Ratios Every Trader Should Know Before you purchase those. Strongly recommend getting some Tiger Dollars. You're going to get some great savings that way. Tim, before we went to the break, we're talking about the SPY. I just want to clarify for myself, this big leg down we had yesterday, when you get kind of this, I think you said something like, I guess it would roughly be like 130% of the volume, right? We had, I guess, 150 yesterday, roughly. That shows kind of an exhaustion in that movement, I would suppose, either way as well, even on a big leg up. And so that's kind of what's showing you're getting a little bounce going. That's what we're having today. And the bounce is on, far, far lighter volume. Is that a right way to kind of look at that?
Right. If you look at the chart on that SPY chart, the last one we had was mid-November, which actually was exhaustion move to downside volume. You get that spike where you get a volume that looks like a finger out of average daily volume, and all of a sudden you get a finger out of it, kind of just sticks out. When that happens, it takes all the energy out of the market. All the energy is just displaced. A lot of times the market will just stop in that, and it'll flip it to consolidation. But I always define a selling or a buying climax when volume's at least 50% higher than the previous days before it.
I see.
And if you look at yesterday's volume, we're probably about 100% higher, maybe like you said, 150% higher. So all that energy's been spent. So the down climb at the moment has stopped. And so the market may go into consolidation for several days, build up enough energy, then it may do another decline. I don't know. But over the last couple of years, those exhaustion moves to the downside, all of them pretty much marked bottom. Some were tested, some were not. But usually you want to buy those exhaustion moves to the downside. So this one, because I think the uptrends may be ending, this is not the one to buy. All the rest of them, when you had a spike in volume, the trend jumped up at least at 1.2 or higher, showing panic at that exhaustion move on volume to the downside. This one, you don't have an exhaustion, or you do have exhaustion volume, but you don't have panic in the trend. So this is not a bottom to buy, other than a minor bounce to the upside.
Okay.
So I don't know.
Yeah,
Is that too
fantastic.
much words or what?
No. That very, very enlightening on that. Thank you. And then I know we kind of got cut short. I didn't know if you had anything else you wanted to say on the moving average. I think it was chart 3, because I know we kind of skipped into chart 4 a little bit early.
Actually, this is kind of a ZBT thing, but it's set up too.
Right.
I guess ZBT, that's that Zweig breadth thrust indicator. This is kind of another, instead of advancing issues over total issues, is advanced decline type thing with 3-day averages. It responds a little faster. This one usually responds pretty fast. This is a 10-day average. This is not 10 trading days, but actually 10 days. So this, if this will respond by next week. So for some reason, this market does rally and rallies into, say, Monday's or next Wednesday's Christmas, but say the market does rally into next Friday, and this 3-day average of advanced decline does get back to 0.3. If that happens, chances are the ZBT may also trigger, and that whole thing would turn really bullish. So that's the reason why this one acts a little quicker, and that's the reason why I'm showing it. But I'm thinking that's probably not going to happen. So we'll see. So it's not a good sign how yesterday's decline, how it went down, because we didn't have panic in the ticks or tricks, or trend or ticks. So I don't want to confuse everybody, but
no, it's not confusing at all.
Things are not looking good.
Yeah.
So we can go on to the gold market here real quick.
Yeah, I think so. Let's take a look at it.
All right, chart 5. This is a bottom window. This is a weekly GDX-GLE ratio, goes back to 2012. And I noticed here, I was doing some research, and every time this ratio got down to around, actually it's 0.14 area, which we're pretty much, we're at 1.43 right now. But every time it got in this vicinity over the last, 2018, every time it got down, that was an intermediate term low. The 2016 low did get a little bit below it. That was a fast rally to the upside. But back in 2014, we got down to this 0.104, and we're back down there again. So I thought that was interesting. It's kind of a valuation that compares gold stocks to gold, and when the valuation gets cheap, a lot of times that's a good buy on gold. So I'm kind of wondering if this is actually there's going to be a change next year of how the market, what's going to lead the market. I don't think the equity market is going to be leading the way, and I'm trying to find what's the other sector that may do that. And gold stocks is a possibility, so I'm looking for that possibility to happen here. And if you look at the GDX chart, again, this is a weekly. I drew some trend lines there, and we kind of, it looks like to me it's a head and shoulders bottom, which I called before, and we're back to one of those necklines. And with the GDX GLA ratio back down to where it's bottomed in the past, going back to 2013, I think this area could be an important area. And there's another reason why. We flip to chart 6.
Yep.
This is more of the shorter term version, but the top window is GDX. Next window down is the cumulative up-down volume. Next one lower is cumulative advanced decline. The bottom window is the GDX GLE ratio, and I just put Bollinger Bands on it. The last buy signal I got was at the November 15th low, where all 4 of those indexes hit below the lower Bollinger Band, and the blue lines are time when you hit above the Bollinger Band, and the red lines are hitting when you hit below the lower Bollinger Band. And again, we're hitting right below the Bollinger Band on all 4 instances. With that, also with the GDX ratio hitting down around that 0.14 range. So I thought that was kind of intriguing. And if you go to chart 7, back in November 15th, we had the inflation, or we had the 18-day average up-down volume advanced decline indicators. Both of them hit below minus 40 back on November 15th. And well, we actually broke below that November 15th on GDX. And I listed the time squared in red boxes.
Tim,
where they made higher lows.
Do you want to wait?
I thought that was important too.
Do you want to wait a little bit into the next segment, kind of explain this chart a little bit more?
All right, I could do that.
Fantastic, Tim. Thank you. Folks, stay right there. We'll be right back with Tim Ward right after this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show right here on TFNN. I am joined right now by Tim Ord of the Ord Oracle. We were just going over the last chart here on the GDX. Tim, if you could kind of run back over just a little bit what you were saying. I know we kind of went into the break there, so.
All right, go back to, I have a squared box back in 2016.
Yes.
You can see that the best. And anyhow, that indicator, both indicators, 18-day average up-down volume, both hit below minus 40, it looks, I don't know, mid-2015. And the market quit going down. It kind of went sideways for several months, but did hit a lower low, looks like about in early 2016. The point is, both indicators made higher lows. So that's what I'm trying to point out. Same thing happened in 2022. Both indicators went below minus 40, and the market actually went a little bit lower over the next several weeks. And both indicators made higher lows. And we have the exact same thing right now. We hit, November 15th, we hit the bottom window's advanced climb, we hit minus 42, and the up-down volume hit minus 48. The market bounced up. Now we're hitting a lower low, but both indicators are making higher lows. And this is a pretty rare occurrence. Yep. This goes back, almost 10 years. And the signals that generated when this indicator, both those indicators get below minus 40, only happen, 5-6 times over a 10-year period. So you don't get once a year that happens. So this looks at the bigger trend. So the market really, to have this type of a signal, you really have to have a kind of blowout market to the downside. And that's really good. You don't want to have a minor pullback. You want to have a blast out pullback. And that's right. Just what we had. We had a little bit of price damage, but it didn't really hurt anything on the bigger time frames. The monthly charts are still on buy signals. The weekly charts are still on buy signals. So I'm thinking that this positive divergence over the last several, going back to 2015, the previous two worked just fine, and they actually had some pretty screaming rallies off that low. And I'm thinking this is a possibility this to happen here too. So, I'm saying there's going to be a shift in leadership next year, and there's always a bull market somewhere. And I think this gold market may be one of the bull moves next year, where the equity market maybe, I don't know, it won't be as strong as it was this year.
Sure.
And I haven't, will be a down year. I'm not for sure yet. It could be kind of a sideways year, so we'll have to wait and see. Normally when you get a president come in, a lot of times the first year of a new election president, the market doesn't know what the president's going to do. So it kind of waits and sees. Sometimes you get a bear market. Sometimes it kind of just flips sideways. So Trump's going to make changes. And market does not like changes. It likes predictability. That's the reason why it did pretty well over the last 4 years, because they knew what Biden was doing.
Yes.
And so that was kept the confidence in investors. Investors are not sure what Trump's going to do, even though he's for bull markets, but it may affect his decisions on some things may affect their investments. So they're going to kind of wait and see.
Definitely.
So not necessarily bad. Could be more of a sideways year, but probably the year after would be much stronger. So we'll have to wait and see how all that develops. But inflation is still there. It's going to probably be stuck there for a number of years. I don't know. I think we'll go out to 2027. I think inflation may last that long just because of the cycle analysis. But this is still one possibility that the gold stocks may do very well next year. So
fantastic.
We'll have to wait and see.
Yeah. Tim, thank you so much for coming on again. I think.
All right.
Yeah. I'm gonna have to check. I know Tuesday's the 24th. I think we're still open. We'll keep it posted. But if not, We'll see when we see you.
Actually, I'll be out of town, so I won't be here.
How about that?
So I'll be here Thursday, but I'm leaving. So next Tuesday, I can't make it.
No problem at all. Well, then, Tim, we will see you Thursday the 26th. Hope you have a fun time where you're going, all right?
All right.
Merry Christmas, Tim. Thank you.
So we'll see you then.
Sounds good, Tim. Thank you so much.
Christmas.